Okay, let's go through the stock market technical analysis. We'll look at some of these charts. We'll look at the tech stocks. Obviously, NVDA is important to the market, and we'll go ahead and wrap up. I want to look at the bonds and anything else that I'm kind of as I'm scanning through. So triple Qs, guys, biggest thing that I'm seeing. There's a couple things. Really, you want to look at triple Qs, but you also want to look at the futures. All right, and then it's also good to look at SPY and the SPY futures. On triple Qs, the daily chart, we basically gapped up yesterday. We're holding above this trend line right here. So this was the trend line. You can see lots of reactions on the daily chart, indicating that we had a breakdown of that trend right before the NVIDIA earnings, and then obviously NVIDIA earnings, they gapped it up. I no doubt ran a bunch of stops on any shorts for sure. And today we're seeing some selling, but we're still holding the trend line, so that's key. If I go down to the hourly chart here, you'll notice on the hourly right there, this is kind of the price action that I'm watching. Here's your trend line, they gap up, they're selling it down, they're back at the trend line, buyers are trying to step in right there. So we need to see that trend line break for the next kind of sell signal on this one. That's really critical. So at this point, I don't think it makes sense to add to a bunch of shorts. But if you see that trend line break, then that's very likely going to be the next sell signal. And then if I flip over to the futures, here's the futures. I got to go to the daily first. Okay, on the daily, you've got this upward trend line. This is going, all the way back to October. So pretty much the rally that started back in October of 2023. Support, lots of reactions. We have a breakdown. We have a back test. Yesterday was just really a back test. Now, yeah, they did close it slightly above, but again, just inches above is not an impulsive breakout above a key level. Oftentimes when you get to a key level, they're either going to overshoot it a little bit or undercut it a little bit. That's market makers typically playing games, or the algos. Everybody, this trend line is very obvious, so you'll have a lot of kind of moves through key trends as they run stops. And then today, you can see even today they were up here, looking like they're going to hold the trend line, but so far today they're back below it. So it's still we're still back testing. Now I don't know if we're going to reject today and completely get a big down day. I don't put a high probability in that. I think we'll probably hold in here and maybe even hold, right around this trend line, kind of keeping everyone guessing into the weekend. So that's what I'm seeing on the NASDAQ futures. But then when I'm kind of looking across the board, especially in the semiconductors, now the semiconductor index, SOXX, very heavily weighted with NVIDIA. So obviously that one it's basically an NVIDIA index at this point. So you really have to keep an eye on that if you're interested in this trade. This one's above the trend line. There's really no reason to be short right now on this one because there's no sell signal. We had a brief breakdown, obviously right here, but not very impulsive. And obviously they gapped it up on the NVIDIA earnings, and we're above trend. So that's it on that one. No sell signal. We do have negative divergence on the daily chart on both momentum indicators. So I'd put good probability that sell signal is coming sooner rather than later. This negative divergence didn't even really show up till about here. So this is the time frame that we're talking about. When I start pointing out negative divergence, I really would have noticed it right in here. And so that's kind of how these trades play out. This is going back to January, so we're looking at about a month worth of divergent. We're diverging for over a month. We can continue to diverge. I don't enter trades or short anything based on divergence, but I'm on the lookout for that break of trend. So NVIDIA earnings is out of the way now. We're likely, there's a few other semiconductors that could, move the market. AVGO is maybe one of them. But in general, NVIDIA is kind of the king here. So we'll be on the lookout for that sell signal. With the divergence in play, I think it can happen, but we need to see it, a break of trend. And then some of these other stocks, NVIDIA, there's really not too much in the chart right now. I did take a short on this. I covered my short yesterday. Basically, at the end of the day, I wanted to see where we were going to trade at. So the short was entered on the break of the trend, but the gap up obviously caught me on the wrong side of that. Covering, it's about a 7% loss for me. And again, that's why it was a very small starter position. I did talk about that. Again, I can't reiterate how much. If you were short NVIDIA right ahead of earnings, it was a high risk trade. We did have a breakdown, but it was right ahead of earnings, so definitely high risk. So that's why I said it made sense to not have any position size that was anything that was going to really hurt you, and that's exactly what the size that I had. So got rid of that one. Again, I just don't see. We're above this trend now. We're still holding the trend, so there's no sell signal. I can't remain short on something when I don't have a sell signal. I do have negative divergence, but I don't have a breakdown of that trend that I can trade against. So until I see that, I got to exit the short on that one, take the loss, move on. But there's a few other trades that I do like. This SMCI still is a good trade. It's still working right now. It's down 13%. I actually added to a short position on this one yesterday. Not a huge amount because obviously the mania was there, and so I wasn't exactly sure if we were going to get some weird wonky price action in the charts. But I did add right there on the back test. So again, the way I'm trading this, this is the daily chart. We have an uptrend line here. We have a break of trend right there and a bearish engulfing candle. So that's the reversal candle that I'm trading against. And obviously we confirmed price action with the following days, gapping up yesterday right into resistance. It's objective to short when you're right in resistance. So I added to my short right there on that one, and then today we are down about 13-14%. This is a big mover, so again, this one you don't need a huge position size to make any kind of real money because this thing can move 30% in a day. And then what I would and then my stop, I don't want to see this thing really have a daily close above that big reversal candle. They can trade up into it. I'd be okay with them closing right on that level, but anything much above that with a daily close, intraday I'm okay with it, but a daily close above it would force me to stop out. All right, so that's my trade, and then ultimately I can see support. I don't see, this is just a straight move up, so I would expect kind of a straight move down, or at least pretty good move down. I don't see support till about 358 right in here. So I think we're going to see that. I think we're going to see kind of, it could chop around a little. Maybe they want to test this up here, run some stops. But ultimately, I think we're heading down to that 354. So risk reward. And I just want to kind of define how I call these, how I build these trades out. Because I can't be there to call it play by play exactly. But on this one, all right, so let's say you entered the short on the back test, because that's the objective area to enter. Then your stop would be on a daily close above that candle. So let's just say you give it a little bit of room, because if it closed right near it, you got to give it a little room. So let's say that's about 12% potential stop. So that would be your risk, and then your reward is really the first profit target, or the only target, I guess, that I can really see is down here. And that reward would be about a 60% gain. So it's a 6-to-1 risk-reward ratio. Those are good trades. That's a favorable trade. Doesn't mean it's going to work, but you take those trades, more often than not, you're going to make money over the long run because you have a good risk-reward ratio. And then some of these other semis, again, I think the semis are really important because it's just this NVIDIA mania that's going on. So I'm looking for signs that's over, essentially. Here's AVGO. I think this is the number 2. Maybe Qualcomm is, but this is definitely up there in the semiconductors. AVGO, Broadcom, you've got an upward trend line right here. You have a break of trend. So this was a sell signal and then a gap up into resistance on that earnings report for NVIDIA. Still kind of back testing. So again, there's no technical change here. We have a break, we have a back test, and it can continue to back test. That it can do. If you want to be conservative, maybe you want to wait for, I don't know. It's probably going to set up on the hourly. You'd probably have to narrow it down, and they're probably going to try to hold some sort of little minor trend line on the hourly for maybe a couple days. But, maybe just taking out the lows on that gap up, something like that. You can see about 1281. That might be the next sell signal. But again, what I see is a break of trend on the daily chart, a back test, and it's an objective short in this area. Scanning across some of these other ones, AMD. All right, let's go here. Look at AMD. Same thing. We have a breakdown, okay, and we have a back test into resistance. All right, so until that changes, that is a back test of resistance, and it should likely sell down. We also have negative divergence on the daily, kind of making an equal high here. I think they're going to probably grind it maybe a little higher. I could see that, and put in a new divergent high while backtesting and then reject. That would make sense. Okay, so that's the semis. That's really the only ones I think that are super interesting. Treasury yields, TNX coming down today, kind of pulling off. And so, I think that with the interest rates coming down with the NVDA hype, I think the market's probably going to hold up today. I don't see the market really. I think they're going to close the week with kind of the gains and and that'll be that. But they're not, interest rates aren't falling really. We're kind of in this little range right here. There's really no technical change today. I am continuing to look for a break above those highs. A pop of interest rates, boom, above the highs should spook the market. So, be on the lookout for that. If interest rates if they start falling and start to come down, that should be bullish for the market, especially the interest rate sensitive sectors. LLY continues to be a trade idea. I think it's actionable. On LLY, it's the same setup as SMCI. Bearish engulfing candle. All right, so a daily close above that would negate this as a trade, and you'd want to stop out. Again, not just barely above. You want to see, a obvious daily close above. You'd want to stop out on this. Otherwise, this is a topping stick. We have follow through the next day, so this is what we look for and trade against. And so you can see bearish engulfing. A couple days of a rally, starting to sell down today. So as long as this holds, then we should continue lower. On this one, I don't know. Maybe there's a potential trend line down here. I don't have a really defined trend. Maybe we got something like down here. It's not the cleanest chart at this point, but yeah, I think lower prices on that one. So we'll continue to trade against this bearish engulfing. Look for some of these reaction highs as near-term profit targets. And someone commented how I only point out shorts and I never point out longs. That's not exactly true. I definitely point out more shorts because I think the market, with the divergences that have been building, is looking to come down. So I think there's more opportunity on the short side, but there's still opportunity on the long side. Disney obviously was one of the longs I talked about. Charted this out weeks ago. It's just I'm not going to point out the longs in a parabolic move up in a mania. All right, that if you want that's just momentum chasing. It's a game of hot potato, and yeah, you can make money on one day. Maybe you make money a few days, and then all of a sudden they gap it down, and you're stuck in losses. So I'm not going to point that kind of stuff out because that's really chasing. That's a different style of trading. And most people in manias, if you really look at it, most people lose money. The early people make most of the money, and then the masses come in towards the end of a trend. They'll feel rewarded initially because it's momentum. So they'll buy, they're profitable, everything's great, and they don't get out, and then it dumps on them, and all of a sudden they're underwater and they don't get their money back. That's how those moves typically work. So I'm not going to point that stuff out. Typically, I'm going to look for the other side of things on that. But Disney is a stock that did look good. We were bullish falling wedge. We had bullish divergence. We had a breakout there. This is all stuff I pointed out. Rallied. All right, rallied. I think this trade's over now. I mean, I don't. Maybe there's some more there, but this trade's done with from my perspective. But yeah, that's a long trade that I did point out. And these are the kind of trades that I'm going to look to enter. I want to buy things when they're falling, nobody wants them. I want to sell them when everybody wants them. This is another trade. I pointed it out, I believe, to the private member group. I don't know if I did on the public channel. It's working. It's not working great, but I think it's starting to work. On the daily chart, you have a downward trend, you have bullish divergence, and you have upward price momentum now. It's starting to move higher. So this is when I want to be long. I want to be long before the mania shows up. When the mania shows up and it's way up here, this is when I get comments, hey, why aren't you pointing out longs? The market's ripping. It's FOMO is what it is. People feel like they've missed out, and so they want to get into that, and they want long trades when things are ripping higher. Again, I want to point out the long trades when nobody wants it, all right? I want to sell when everyone wants it. And yeah, obviously I missed, some of the rally. I'm going to miss some trades. I'm going to miss some trends. I'm not going to catch them all. But we do catch a decent amount of them. Mostly I've been looking for short trades because, again, negative divergence. On triple Qs, the negative divergence here, we've got this divergence here. I think there's a larger divergence that goes all the way back to June of 2023, so started to diverge there. Really, this was a divergent high. So we've been diverging on this pattern for quite a while, almost a year now. And if I go down to the weekly chart, this is going to show you the larger potential trends. The weekly, there it is. See, we've got negative divergence there on the weekly. It's been extended. So I don't want to, these divergences can continue, but I'm not going to be looking for long trades into divergences because, again, that's kind of usually from my experience, that's the tail end of moves. That's the momentum move where everybody's piling in. It usually signals kind of the end. I think we're near that, but again, we need those sell signals. We need some short-term stuff, so we'll just patiently wait on that. When everyone's piling in and we get those sell signals, I know myself personally, I'll be going the other way, hopefully getting early on the next trend to the downside. All right, I'm going to wrap it up here, guys, and I will get the video out.